Hey guys, welcome back to another video. As from the title you can see, yes, I managed to flip a $100 account to $1,000. Now, just to let you know that I've been trading about 4 years now, so losing $100 wouldn't be a problem at any given time. So all I had to do was just take 2 trades, and these were the trades and profits. Now, I would like to share with you guys the trades that I've taken, the analysis, the setup, and what was going through my mind while I was holding on to these trades. Let's get right on the video. As you can see, the account balance is at 1,000 right now. So the first trade that I got on this challenge would be a 0.20 lot buys, and this was when the FOMC numbers were released and the numbers were neutral. So I'm not expecting too much of a seller's action here, more than just buys as usual, because the trend was bullish. So you might always take buys in a bullish market, not the opposite, right? So I had my H1 support drawn. As we know, price loves to find premium price, before going the other way. So I had my H1 support drawn here, sort of like a liquidity move, and I waited for price to spike down. As it did, it spiked up, it got a perfect price right here up to 1965, and when it pulled back, I kind of missed the first entry because of the spreads and execution, but I eventually got in when price starts to pull back. So I had a buy here, and my stops were just kept a couple of pips below this low, and my take profit was set up here because there is a level of minor resistance on the 5 minutes. So and it was almost, the market time was coming to closing, so I didn't want to hold it longer. So I had a buy here and a couple of stops, and I just held it all the way up to here, and that gave me a solid 40 pips. So before taking this trade, the account balance was at $139, and after taking this trade and closing out with around $84 in profit, the account balance was at 200 something, roughly around there. So when moved on to day 2, I have good margin, and I found the perfect setup. This setup was unmissable, so I had to, up my lot size and take the bit of risk. But surprisingly, my drawdown was about only less than 20 pips, and boom, it just went straight to profit. And this was also taken during the New York session, and there was a catalyst from the news numbers that were released, which was a negative for gold, and that just pushed the gold market right down to the daily support. So as you can see, this was the entry that was taken. It was each position was 0.1, so that totals up to 0.3, and I closed in roughly about 270 pips, and that's crazy. I could have held it for a little longer for extra 70 pips, but I follow my strict trading plan, zone to zone, and nothing else. If the market moves beyond my closing point, it's fine. It is what it is. So I'm just going to hop on TradingView and just show you guys a real breakdown on how did I manage to secure this trade. So now, zooming out to the weekly, as you can see, guys, this was a weekly level of resistance, and previously, which is last week, price pushed up, eventually closing very weak bullish, just leaving an entire exhaustion wick on the weekly. So that gave me an insight that price wasn't ready to break out of this weekly resistance. So now going on to daily, as we can see right here, there was, previously on the daily, we had found a nice little support, and price traded all the way up until the weekly resistance, and there was a bit of traffic. That caused price to slow down. If the momentum was still good, price would have just traded and like this and kept going up. But it seems like gold wasn't ready for that bullish movement just right yet. So we had this pullback down, and right until the daily support. So this is personally my trade setup that I've been working on for so long and just perfecting it. Right, so this setup is basically, it's called the lower high setup on the daily, and this is what I'm trying to say. It's like, look, we had this series of movement right down, right until this solid daily support. Okay, we had right movement until this daily support, and price touched the daily support and start to trade back up. So it traded back up, let's move up, and just right until here, this was a minor level of supply on the hour 4. As you, if you're familiar with supply and demand. Sorry guys, let me just make the chart more clean, you know. So this was the daily support. This was the daily support. And this was the weekly resistance, which failed to break twice now, as you know. So that means that this is a pretty solid resistance, and we're just not gonna break, you know, on a casual Monday or a Friday. There has to be some sort of a catalyst, like news event or interest rate, you know, spike or things like that. So now this is what I'm trying to say. Price eventually created a supply and demand. So of course, my trade consists of supply and demand. And for confluences, recently I've been, you know, playing around with Fibonacci retracement, which has really been helpful for me to get on the retracements, right? So this was a supply level on the hour 4. Now look, supply level when price visits the first time, it retraces hard, and that is what price did. You know, price rejected off the daily, traded up right until the supply, and boom, back down, eventually breaking out of the daily support and closing at another daily support, right? So the trade, look at H1 guys, look at H1, sorry, look at H4. We had a series of bullish candle, just one or two bearish candles, but overall it was bullish right here, right up until this level, which is a supply level. And notice how the two candles were bearish, which means at that point of time, the sellers were in the market for 8 hours compared to the buyers, and there was no signs of any buyers. So that also gave me another confluence that there were sellers in the market compared to buyers, and it was at a supply level. And my third confluence was the Fibonacci. So as you know, point A to point B, and look how price just rejected off the 78.6 level. And this, as we all know, 78.6 level is a huge, strong level. And my fourth confluence was just market structure. Look, we had a higher low, we had a higher high, we had a higher low, we printed a lower high, which means market is going to come down. And that's what I did. Low high and lower low. So I'm going to list down all my confluences on why I took this trade. The first confluence would be supply retest. Second confluence would be H4, right? 2 H4 candles at supply level, which means the sellers are over buyers. And the third would be 78.6 Fib level. And the fourth will be lower high market structure. You know, so that gave me the confidence that, okay, this is going to head downwards. All right, so for the entry, which is the main thing that I want you guys to learn from here, how did I trade this entry? What was my confluence on getting on that immediate sell? Now look, this was the supply. This was the level of supply, right? So you can see left, supply, supply. Now, all I'm looking for is just engulfing of price action. Look at candle. So we had this little bit of neckline right here. And this candle was extremely bearish that it engulfed previous 1, 2, 3, 4, 5 candles. So once I saw this string, you know, if you know the candlestick patterns, you will know that bearish engulfing is one of the top tier candles that gives you super confirmation for you to click that buy or sell. Bearish engulfing, and this was just on the right on the 8 a.m. EST, and that is when the New York session traders are coming in the market. And this bearish engulfing was, you know, just great that it just took out previous price action and even eventually broke out the neckline. And so yeah, that's all I'm looking for. Simple bearish engulfing and straight down, and just move for about 270, just right. I closed my trade here. So I closed my trade right at the, let's see, I closed my trade right at the level here, because this was, if you zoom out, you can see here exactly, because previously candles traded right up until here, and the body of the candle closed above this level, is 1950. Also, I would say psychological level. And that was the trade, guys. That was the trade that, you know, cost me 100, that closed out for about $800, and extremely good, you know. So the account is now right at 1,000. So I do have a plan of turning that 1,000 to a 10,000, but I'm gonna refresh, or go back on my charts again and do a bit of homework first, and then once I'm back, and I will surely do 1,000 to a 10,000. So stay tuned for the next video. I will be posting on the new challenge that I'm gonna be doing. So yeah, I hope you guys learned it from this video, and I only focus on just good setups that I've been really experienced on, and not all the setups that I see on the charts, only good risk rewards and good setups. So take care, guys. See you in the next video.